Hello, welcome to Asia House. I'm Michael Lawrence. Great to see you here today. A packed house in the room, and we're also joined by near 200 people virtually. We'll be bringing you into the conversation as well, I hope. Your Excellencies, thank you very much for being here. We have 4 heads of mission here and a couple who have dialed in by Zoom as well, and of course a delegation from the Philippines. Ladies and gentlemen, welcome to Asia House. And today we launch the Asia House Annual Outlook for 2023. And we do so at a time when the world's facing enormous challenges, economically and politically, with slow growth, persistently high inflation, oil price volatility, and of course, geopolitical tensions. Our analysis shows that Asia can defy some of these trends and deliver quite robust growth in some cases in 2023. There are inevitably risks, and we highlight these in our report as well. You should by now have the executive summary, which we handed to you as you came in the room. Those online, you can get it by using a QR code, which we'll send to you. And we'll be briefing you very shortly on the key findings of the report. We have a truly impressive lineup of speakers today who are going to delve into the reports, but also speak more broadly about their views on the outlook for Asia. In a moment, I'll invite Anne-Marie Trevelyan, who's the UK's Minister for Indo-Pacific, to make the opening remarks. But first, I'd like to invite Stephen Green, Lord Stephen Green, the Chairman of Asia House, to welcome you all here today. Stephen.
Minister, Your Excellencies, my Lords, ladies and gentlemen, it's a very great pleasure for me to be here as Chair of Asia House and to have just a minute, I'm not going to take more than about a minute or possibly 2, to introduce this occasion. Our economic outlook is an important calendar event as far as we're concerned, and it's wonderful to see so many people in the room and on the screen. Our view is and remains that Asia is going to be the driver of world economic growth for as far ahead as we can foresee. Doesn't mean to say that other parts of the world should be ignored, of course, but Asia remains what we believe it has been now for 2 or 3 decades at least, the driver of world economic growth. Our economic outlook, I'm not going to talk in detail. First of all, I'm not the economist. Secondly, you don't want to hear me, but we focus on 8 countries in particular this time. We published some economic lead indicators that focus particularly on digital readiness and on sustainability, and we, as it were, kind of mark the performance of different countries around the region on those 2 indicators. One of these days we might mark the UK on those performance indicators and see how we do. But it is important that these mega trends that are transforming all economies and all societies be kept under close watch. And we believe that it's part of Asia House's job on behalf of the businesses and others who are focused on Asia. That's what we're here for. It's important that we make sure that we're tracking those kinds of developments for our supporters and members. So this is an exciting time. You don't need me to tell you that the world is full of complications and challenges at the moment. Everywhere you look almost, Asia is not exempt from those. China is undergoing a remarkable shift at the moment, and we will see what the implications of that are for global trade, world economic growth, and there are plenty of other interesting developments in the region, shall we say. So we need to keep an eye on it. We need to keep very focused on the fact that Asia is crucial, not merely to the development of Asia's own peoples, but also to the rest of the world and to us here in Europe. So without further ado, I'm going to invite the Minister, Anne-Marie Trevelyan, to come to the stage and share her thoughts.
Thank you, Stephen. Michael, I'm so pleased to be here at Asia House today. I was recalling that I thought I'd been here before and then realised that I'd only been here virtually. So it's lovely. I'm sorry for those of you who are virtual, but it's lovely to be actually here, the sense that we can gather once again and really share our thoughts, the work that you're all doing at a personal level. It makes such a difference. We've got, of course, a phenomenal panel this morning and so many incredible experts and leaders around the world. So today I really want to reaffirm the UK's ongoing commitment to the Indo-Pacific region, highlight, I hope, some of our successes, and explore the ways in which government and business can work more closely together. Because making the UK's Indo-Pacific strategy into a clean economic and security reality is partly achieved, of course, by businesses creating strong ties and achieving mutually beneficial partnerships, whilst they capitalise on all that the UK has to offer, from the City of London to our world-class universities and, of course, our luxury brands. As the International Trade Secretary, I promoted UK trade and investment and built trade deals as frameworks for businesses. Now, as Minister for the Indo-Pacific, I have the wonderful role of helping to smooth the road ahead so that you can forge these connections, both in the UK and across this great region. If rules, regulations, or political decisions are getting in your way, I'm here to help. So building those stronger relationships in this region is a top government priority. First set out, you will have noticed, in our 2021 integrated review. Our new Prime Minister and Foreign Secretary are currently refreshing this whole of government framework, which will set out how our Euro-Atlantic and our Indo-Pacific economies and security are inextricably bound together. We believe in a free and open Indo-Pacific. All states have the right to ensure their sovereignty. So competition should be managed in a way that minimises strain between great powers and doesn't spill over into conflict. China remains incredibly important to the UK, both as a trading partner and in tackling global challenges, such as climate change. But we are clear-eyed on the need to respond to those systemic challenges which China may pose to our values and interests. The appalling illegal invasion of Ukraine has underlined the interconnectedness of Europe and the Indo-Pacific, as brutally demonstrated by the global impact on the conflict of energy and food prices. As 60% of global shipping passes through the Indo-Pacific and more than half of global growth is projected to come from the region by 2050, though perhaps the report will tell me something even more impressive than that, the UK must have her strategic focus facing the region. So to ensure that we can strengthen our resilience and protect our security, we need to strengthen our partnerships with like-minded states. The Indo-Pacific is home to many who are, like the UK, committed to territorial integrity, freedom from economic coercion, and the open market. So how are we doing this in practice? Well, one of the first actions of our tilt was to secure ASEAN dialogue partner status, and we have now agreed our plan of action. The opportunity that our UK-ASEAN cooperation offers for UK business is vast. ASEAN as a bloc is competitive in manufacturing, and our UK economy is highly complementary given the strength of our financial services. The UK government is actively supporting a pipeline of investment into business collaboration across a variety of sectors, including, of course, R&D. Last year, the first UK-Singapore bilateral R&D call was launched with £5 million of Innovate UK funding. Over 50 joint proposals were received, 19 projects are being funded, supporting businesses across all parts of the UK. So the UK recognises ASEAN countries' determination to maintaining peace and prosperity across the region, because that's how business and prosperity can thrive. We are working closely with Australia and the USA to bring world-leading submarine technology to the Australian Navy through the AUKUS partnership, which will support their regional defence and security capabilities and commitments. I renegotiated world-class, modern and expansive free trade agreements and 2 new ones with Australia and New Zealand last year, and we're working to conclude an FTA with India. We have new digital economy agreements with Singapore and Japan, making it easier for our companies to collaborate on tech initiatives and to cooperate more closely in IT and telecoms. For example, building on recent successes like Rakuten's decision to build a new 5G facility in the UK. We will be the first non-European country to accede to the Comprehensive and Progressive Agreement on the Trans-Pacific Partnership. Oh, first off, you impressed? CPTPP for friends. This will not only give us access to a partnership with a joint GDP of £9 trillion and remove tariffs on 95% of all goods traded, but we will also be able to share our legal expertise and our other professional services to help shape future trading rules. This is particularly important when we look to the current and the future challenges of governance for artificial intelligence, the use of data, and cybersecurity. Much of the innovation in these areas will come from the Indo-Pacific region, which is why the UK government is so keen to strengthen our collaboration across science, technology, and R&D. One of our most successful collaborations is the Serum Institute's partnership with Oxford University and AstraZeneca. As well as unlocking access to 5 million COVID vaccines in the UK, it's led to an investment of £50 million in Oxford Biomedica and the opportunity to deliver their groundbreaking malaria vaccine with the potential to save millions of lives. The recently agreed Global Combat Air Programme between the UK, Japan and Italy will also push technological boundaries to deliver the next generation of fighter jets. This partnership will pool the expertise of our 3 countries to deliver cutting-edge defence technology. Innovation and collaboration are also imperative to tackling the biggest issue facing us all, climate change. The Indo-Pacific is on the front line, with many littoral communities threatened by rising seas, typhoons, and millions at the mercy of drought. The UK is proud to be a global leader and convener on climate. Our businesses and our universities are innovators and producers of renewable and low-carbon services. UK climate change partnerships are mobilising billions of pounds in green finance, including the UK's Climate Action for Resilient Asia programme, which will support up to 14 million people to adapt to climate change. We are also supporting Vietnam and Indonesia to deliver on their net zero ambitions through the Just Energy Transition partnerships. With G7 partners, we want to support ASEAN and other countries to develop the future infrastructure that they need. To help achieve this, we have opened a new British International Investment Regional Hub, the UK government's development investment arm in Singapore. Through it, we intend to invest up to £500 million in the region over the next 5 years. BII will partner with investors in the region to help these economies reduce emissions, protect the environment, and adapt to climate change. We have a unique and compelling offer to the region, thanks to the skills, the products, and the networks of our people, our businesses, and our institutions. And we are determined to maximise their impact and delivery to achieve our shared ambitions in the Indo-Pacific and weave strong regional ties to create a secure and prosperous future for our children and generations to follow. So let us do all we can together to make them proud of the choices and commitments we make today to protect their world. Thank you.
Minister, thank you very much indeed, and great to see you actually at Asia House, and we'll welcome you back again many times, I hope, over the ensuing months and years. It's now my pleasure to introduce our Head of Research and Advisory, Zuchen Mao, who's going to give you a brief summary, an overview of the report. You have the executive summary. You should have received it. The full report is a very lengthy, substantial piece of work you can get by downloading that QR code. But please welcome to the stage, Zuchen Mao.
Thank you, Michael. Good morning, everyone. I will be spending the next 15 minutes or so highlighting some of the key findings from our flagship publication, the Asia House Annual Outlook, which includes the main risks and uncertainties of 2023, as well as an updated reading of our in-house research, the economic readiness indices for green finance and digitalization. So just to give you a little bit of background of our annual outlook. So the report consists of 3 main components. The first component is where we provide an in-depth analysis of how adapting a trio of priorities in green finance, digitizations, and enhanced regional cooperations will enable a more robust economic outlook in Asia. In that process, we want to shed more light on Asia's bilateral trade and investments. The second component is where we monitor Asia's multiple and multifaceted risks and uncertainties, such as energy price volatilities, geopolitics, and higher borrowing costs. The last component, which constitute a quite important part of the research, is the economic indices itself for green finance and digitalization, which we also update on a quarterly basis. So our assessment for 2023 is that Asia's economy looks brighter, and some will define the downward trend of global economy affected by high inflation and rising interest rates. But that said, growth in Asia will likely to hinge on three key factors. First is an acceleration of digital transformation that in turn will catalyze green finance. The second is striking the right balance in monetary policy, which we see is a risk within itself, which I will further elaborate later on in the presentation. And third is whether we're going to see more regional coordination, particularly in the form of trade zones. This is particularly important because Asia's cross-border cooperation is spread across several economies with clusters of special economic zones within them. And we believe that these economic zones could evolve and transform into broader clusters that not only focuses on manufacturing, but also encompose things like services. As for the individual countries, I'll speak a little bit about the key findings for each individual countries that we have covered. So we cover 8 countries in total: China, India, Japan, Vietnam, Indonesia, Malaysia, Thailand, and the Philippines. Starting with the first set of countries, India and Japan. So India's growth for 2023 will continue to recover from the pandemic and is expected to grow around 6%, surpassing many of the major economies, including China, which will likely to see limited rebound following the abolishment of COVID-19 restrictions. That said, China's reopening, while positive for the global economic prospect, does present some uncertainties in itself, which I will elaborate again further in the presentations. For Japan, so at the time of the writing, the Japanese yen has depreciated against the US dollar by around 26% in the past 2 years. This has resulted in much costlier imports. And given the comparatively looser monetary approach from the Bank of Japan compared with the global trend of monetary tightening, this is likely to mean that yen and yen-denominated assets will likely to continue to depreciate further in 2023. And for Vietnam, the country is likely to register one of the strongest economic growth, and this is largely fueled by a strong recovery in manufacturing, in service sectors, and domestic consumptions. For Indonesia, we are also expecting a quite moderate recovery of consumer confidence, and this is supported by high commodity and energy prices, which will allow the country to diversify from these resources-based growth engines, and as well as digital transformation. Malaysia is also making significant strides. This is underpinned by strong domestic demand and digitalization. As for Thailand, economic growth will be robust, but overall, the inflation pressure remain muted, while the tourism sector, which constitutes a quite big component of the GDP, around 25% pre-COVID, has becoming a quite bright spot. Lastly, the Philippines is also likely to witness growth, which will surpass many of its regional neighbors. So all in all, the Southeast Asian economies outlook trajectory is quite positive for 2023. But then there are certainly challenges within these specific countries, and these challenges are dwelling reserves, for instance, the deceleration of trade, and as well as slowdown in productivities. As for the main risks, so that constitute the second component of our annual outlook report. We have identified 3 main risks at the global level, which are monetary policy mishaps, geopolitical tensions, and higher US interest rate and the dollar. So starting with the first one, there's an elevated risk of policy mistakes given the context, the extent, and as well as the scope of the global economic slowdown, which means that it was likely to keep policymakers in a firefighting mode throughout 2023. So when it comes to the monetary policy, not tightening monetary policy enough might prove costly, which means that it could cause inflation to become much more entrenched. But then on the other hand, if we over-tightened the monetary policy, it could disproportionately harm the economic growth, and as well as where the higher borrowing cost will stifle demand, will spur large outflow and a sudden halt in investment. So finding the right balance when calibrating the monetary policy will be key for many of the Asian economies we're studying, since disorderly movement in financial conditions will only add to the existing vulnerabilities. The second risk is US dollar strength, which is expected to re-accelerate in 2023, after coming off its peak starting at the autumn of 2022. While stronger dollar will further bolster its status as the safe haven currency, a expected re-acceleration will have adverse impact on Asian currency, which we will see these Asian currencies to depreciate, which you can see on the right-hand side of the graph in the shaded boxes in terms of the implications. So a depreciation of Asian currencies will certainly create more headwinds for Asian economies. That requires central bank interventions to prop up the currency. This could also lead to higher borrowing costs and lower domestic purchasing power, including products imported into Asia. And I will add an additional risk related to higher US dollar, which is the increasing likelihood of debt default of US denominated debt in some of the Asian economies. The final risk is, albeit a moderate one, is the geopolitical risk in South China Sea. Given the intractability of the multi-party maritime territorial disputes between China and some of the Southeast Asian Clement states, together with increasing encounters between U.S. and Chinese armed forces in the South China Sea, the risk of confrontation should not be overlooked. That said, the report has outlined several opportunities for US, China, and the Southeast Asia Clement states to collaborate and manage this dispute, which was elaborated further in the full report, which you can download by scanning the QR code. In addition to the main risks that I've just discussed at the global level, we also have identified three very closely interlinked uncertainties and shocks. The first is the oil price volatility. So the further easing of oil prices could be positive via cheaper transportation prices, but the easing could also limit the overall trade as a share of activity in net terms. The direction of the oil prices we see will largely depend on several factors, which includes the conflict in Ukraine, on energy and commodity prices, and I think most importantly, it will also depend on the speed of China's recovery in the energy demand that could both impact the oil prices as well as inflation. Which brings me to the second point, which is the inflationary pressure. The continuing inflation pressure will weigh on growth through higher costs for both producers and as well as consumers, which in turn will limit domestic demand. Although inflation has somewhat cooled off, starting to cooling off, I should say, in certain countries, a anticipated rebound in China since its opening in late 2022 means that this cooling is going to be temporary. Owing in part to higher demand in consumer and energy sectors, which could trigger an increase in oil prices and further add to the inflationary pressure. So the consensus is that that Chinese domestic demand will rebound rapidly starting in Q2 this year. So the trajectory of both inflation and oil prices are partly influenced by China's reopening. But despite the optimism at the global level, domestically there are certain issues and uncertainties that will likely to dictate the extent of China's recovery in 2023. To name two biggest challenges we see, one is of course the troubled property sector, and as well as the domestic side reforms. As starting with the property sector, the government has recently sent out quite a few positive signals in terms of what it wishes to do to revive this, to support the sector. But there are questions whether there's going to be significant supply side stimulus measures. As we have seen in recent years, that much of the support has been targeted towards the supply side and towards the property developers. So I think the implementation of any demand side stimulus measures will be key for China's recovery, and this is of course something that we will be watching quite closely throughout the year. Moving on to the our economic readiness indices, which represents the third component of our annual outlook report. So the indices consists of two pillars. One, as I mentioned before, one on green finance and another on on digitalization. Has four objectives. The first one is to capture the development areas that are significant for Asia's sustainability and productivity. Second is to measure progress in public and private investments catered to meet climate goals and support the sustainable transition. The third objective of the indices is to gauge access to and distribution of green finance in Asia. And finally, we want to assess the breadth and the scale of Asia's digital economy, which kind of, I guess, lead to the logic of research, which I will talk about quite briefly. So the last point on assessing the breadth and scale of Asia's digital economy was really the starting point of this indices and our research, because of the large gap, policy gap in digital economy and digitalization amongst the Asian countries. So this has become our niche research area. We then selected 8 countries based on 3 criteria, which are major economies, major emitters, and vulnerability to climate change. So if you're interested in the research methodology, you can also we also talk about that in more depth in our actual report. So now just speak very briefly on the scores that we have given to the 8 individual countries. Although I won't, given the time constraint, I won't go into, I won't speak about all 8 of them. Here you have the graph on the right-hand side, which indicates an overall improvement for all countries in both green finance and digitalizations. So instead, I will just quickly speak about the country with the largest score and 2 countries that have made sizable improvements. So unsurprisingly, China has recorded the highest economic readiness score for the 2nd consecutive year, as the country is leading in both finance and digitalization. As for the countries that made considerable strides, both Vietnam and Thailand recorded sizable improvement in green finance and digital score, respectively, and this is largely due to their domestic resilient financial conditions. So if interested, this is, again, the PowerPoint only provides a quite a brief note of our findings, but the actual reporting section 4 is where we delve into each individual countries in much greater length and details. Finally, recommendations. The annual outlook report has provided a set of recommendations to address some of the multiple challenges, and as well as how we can facilitate digitalization of economy, how we achieve sustainable transitions. There are three main, I guess, three most important ones that I have picked out, which are to enhance regional coordination. The second is the adaptation of carbon pricing mechanisms to mitigate green premiums, the price of green premiums. And the third is to address digital discrepancies in order to mitigate vulnerabilities in the job market. And finally, just a final note, you can find the full report here by scanning the QR code. Thank you very much.
Zuchen, thanks very much. I'd now like to delve a little more deeply into the findings of the report and explore the outlook for Asia with three very distinguished guests. May I please invite to the stage Janet Henry, Global Chief Economist of HSBC, Marie Duron, who's Managing Director, Global Sovereign and Sub-Sovereign Risk at Moody's Investors Service, and also joining us virtually is Thomas Lembong, who is Director, Consilience Policy. He's co-founder of Kuvat Management. He's also former Minister of Trade and also Minister of Investment for Indonesia, who's joining us now live from Jakarta. Tom, hi. Thank you all very much for being with us. Janet, if I may start with you. We started the framework for the outlook when China still had a zero COVID policy. Obviously, the outlook for China's economy changed pretty dramatically and pretty suddenly when there was that shift. But there still seems to be very different views on where China's economy is going. Well, there's an acceptance there'll be some growth. I've seen reports from others saying it's sluggish or slow, or China will focus on being the growth engine for the world. What's your take on the China growth outlook for 2023, given the policy shift?
As you said, it's quite complicated because there has been quite a sudden turn. And we know from every economy that's reopened over the course of the last year or two that generally that initial pent-up demand that comes through is nearly always stronger than expected. It varies how long it lasts for, but you do see this quick transition from goods towards services. And I think China will see an element of that as well. But we also know that when economies open up, you get a resurgence in cases. So even if you don't get a big U-turn in terms of restrictions, certain groups of society isolate themselves to some degree. So I think the early part of the year on the reopening and the COVID effect will be a little bit rocky. And then we'll probably see the strongest rebound in consumer services, much less goods. It's the same everywhere else. You could get a lot of the goods, you couldn't get the services. You're already seeing it domestically, domestic travel. Absolutely, those economies in Asia that are dependent on travel are going to see big upgrades coming through. You're already seeing evidence of it in Hong Kong. You'll see it absolutely in Thailand. You'll even see it in parts of Europe as the year progresses. But as I think the presentation noted, the property market is important, and this raft of measures has been significant. So we also expect some support and bounce and growth from the property sector. So I think the path will be a rocky start at the start of the year. And as the year progresses, we will see upside surprises to growth, but the implications for the global economy will be a little bit different. In the past, when China reflates, it floats all boats, everyone bounces together. Actually, China's industry and exports have been pretty strong over the last year. Exports are currently weakening. Even its manufacturing and infrastructure has been quite strong. This is a different mix of growth that it's driven by property and consumer services. I think it'll be more about China's domestic growth and the countries that benefit from that, rather than the ones that benefit perhaps from capital goods demand and some areas of commodities. Obviously, energy, I agree, will be supported by transportation in China. So lots of different moving parts.
Yeah. Marie, the risk profile, we've highlighted in the report several risks: energy price volatility, clearly geopolitical risk, obviously, potential for higher borrowing costs if there is a resurgence in inflation. How are you reading the risks in Asia, given there is quite a positive growth outlook overall?
No, very, very good question. And we've just published our outlook for Asia's sovereigns. And the outlook is really our assessment of credit conditions over the next year compared to last year, which we describe in one word as stable. And so it is taking into account this risk, but also taking into account the resilience, the institutional financial resilience that we see in the region. And yes, still some pent-up demand that we think is coming through. So yes, China is just opening up, but I think that the rest of the region also opened up relatively later compared to Europe or the Americas. So there's still that pent-up demand materializing. Growth will be slowed by higher inflation that we think will be somewhat sticky throughout the year, by higher interest rates. But in general, what we see is in Asia, and we reflect that in our assessment of really the quality of the institutions, is really capacity to adjust to these different environments that we think will support growth. So in practice, we're expecting growth to slow down somewhat compared to last year, but still be broadly around potential. So it means growth rates above 6% for the Philippines, for Vietnam, means growth rates at 4% for China, which currently penciled in very tentatively.
So you're looking at 4, right? Yes.
And just above 1% for Japan.
Okay. Tom, I saw you nodding furiously through that. It's your broad readout for the region, especially for ASEAN, where we know you've been a champion for integration over many, many years. Relatively positive with risks being around inflation and a resurgence in inflation and interest rates and currency.
Yeah, I guess ASEAN was surprisingly resilient last year amidst the energy crisis and surging inflation in the West. And maybe to add to my fellow panelists, I think last year we had significantly more slack in our economies in ASEAN than the very tight labor markets or overheating economies in the US and the West. I think this year, again, the outlook is surprisingly good. I might be a little bit more bullish on China reopening than Asia House report indicates. And of course, ASEAN is China's backyard geographically and economically. And so I think there'll be a very significant amount of positive spillover from China's reopening into Southeast Asia. I think very different from India, which I personally view as quite separate and perhaps uncorrelated in many respects to China. ASEAN is kind of like an amplifier to China, right? Like when China contracts, we slump alongside and probably exacerbate the negative impact to the world economy. But when China is booming, we kind of enjoy a knock-on boom and help amplify China's effect to the region and the world.
So you're slightly more positive than some of the others, including Asia House in this outlook.
Yes, but to hijack my fellow panelists' phrase just now, it's complicated, right? I think ultimately, as a action-oriented entrepreneur and former policymaker, I'm very focused on execution, right? I think so much of the prospects for the region and for individual countries will depend so much on the agility and the skillfulness of policymakers in executing against a very dynamic environment yet. So I think the extent to which policymakers are sort of on the ball and are able to preempt incoming risks, I think that will really differentiate, the more successful from the less successful.
Thanks, Jenna. That's something we highlighted in the report: the fine balance that policymakers have to take between taming inflation and encouraging growth. Are you looking at that as one of the key risks for the region? The policymakers pitching their policies to juggle those different demands?
Yes, absolutely. And as it was rightly summarized, the West has faced different challenges. It had a stronger than expected recovery in demand, helped by enormous policy stimulus, very tight labour markets. That's probably, compared with 2 years ago, what most of us missed on the inflation front, was the inability or unwillingness of labour to come back into the labour market. But when you think about Asia in the global context, Asia was last to start tightening. Latin America was first, then the West reluctantly, did play catch up on interest rates. Asia was way behind the curve in terms of tightening policy. I think there's always, they didn't have the same demand pressures, they didn't have the same strength of inflation, but in financial markets, they were for quite a while perceived as being a little bit behind the curve. Now they have tightened policy. And as I think it was neatly summarized, it really will hinge on policy responses, that they don't, as Marie said, inflation could remain sticky in Asia, albeit at a much lower level than in the West, but stickier for longer, helped by some of the demand pressures coming through from China. And I hope that they don't immediately say, well, global inflation's peaked, it's time to stop raising rates, or it's time to cut rates quickly because we've solved inflation. The risk is they may start to ease a little bit early when they focusing too much on growth rather than whether inflation's really going to come back down on a sustainable basis.
Marie, do you rate that as the number one risk, policy missteps, or do you see the bigger risk of climbing US dollar and the more expensive debt that Asian countries are going to have to deal with?
These are risks, and they're probably, in a way, two sides of the same coin, given that financing conditions are set in absolute terms, but also in relative terms. There's certainly risks in the near term during 2023, as central banks around the world really try to calibrate the transition to maybe a new, I think that phrase of new normal is sometimes overused, but I think that's what we're talking about maybe an era of very low interest rates being behind us, behind the world, and now recalibrating what steady state policy, monetary policy is. Longer term, I think we see other types of risk, and we might get into that. I think the report mentions geopolitical risks,
yes,
certainly very much top of our minds. And as well as for fiscal policymakers, that managing of social demands, and that is a universal theme. I think that through the two successive shocks of the pandemic and the spillover effects of Russia's invasion of Ukraine, that governments have stepped in to support their population, to support corporates. And now there's a managing of that with social demands as well versus maybe fiscal prudence. Asia has a good track record in that respect, yes, of really finding the right balance, but it is a balance that has been struck with relatively small social footprint, or government footprint at least. So there might be questions and tests of really capacity to again adjust to these new settings.
Okay, Tom, we've talked about policy missteps, and I had several conversations with Indonesia's Finance Minister Sri Mulyani and Central Bank Governor Perry over the course of the last 12 months. One thing that struck me is they seem to be working in lockstep in terms of policy making, which is not always the case with finance ministers and central bank governors. Is that your take on Indonesia, and is that what you're seeing in ASEAN more widely? I was asking Tom of this, and I'll come back to you, Marie. Tom, sorry.
Sure. Well, it certainly is a case in Indonesia where perhaps many people were surprised during the pandemic that we were able to get away with the central bank directly monetizing our deficits without us tanking the currency. So that was a somewhat prominent monetary experiment that worked out well during the crisis. I do believe that central banks and fiscal authorities do need to work more in tandem, yeah. And frankly, I think right now there's so much focus on monetary policy. I think we could be doing more on the fiscal side, but frankly, even this duality of monetary and fiscal, Michael, I like to go around the world these days, highlighting that we're, in my view, a bit too focused on that. there's a lot of policy outside of monetary. There's a lot of policy outside of fiscal, in economic management, in entrepreneurial policy, in digital policy, in industrial policy, that I think can contribute at least as much as monetary or fiscal to solving our inflation problem, right? And I would like to take this opportunity to convey my appreciation for the prominence that your report gives to digitalization, which I think is a perfect example, frankly, because as my fellow panelists can explain more expertly, the inflation problem we have in the West is one of labor shortage, right? And so if you roll out digitalization that saves time, saves labor, that helps on the labor shortage, right? Conversely, if we in Asia, particularly countries like Philippines, Indonesia, India, where we have vibrant outsourcing sectors, can digitalize more rapidly, then maybe we can help solve labor shortages in the West by making it easier for back office tasks to be outsourced to us in Asia, for example, right? So again, there's so much entrepreneurial opportunity, and there's so much industrial policy opportunity to conserve scarce resources, save labor, make do with less. Yeah. So just a quick point there.
Okay, I'm very happy to take questions from the audience, either in the room or on Zoom. So if you'd like to ask a question, just stick your hand in the air or do so virtually, and the team will bring you in the conversation. But Jan, I want to get back to the US dollar. I will come to you about the US dollar and the US dollar. So are you expecting continued strength in the US dollar? Because that clearly has a massive impact on Asian economies, on their debt profile, on trade. So what's your outlook for the US dollar?
Actually, no, we're not expecting a stronger dollar.
Yeah.
And I think in terms of recent developments, even in the early weeks of 2023, there are two key reasons why there is suddenly a little bit more optimism about the world. Now, some of it may be misplaced. We have had some good news. The inflation seems to have peaked. It's still way too high, but 9% is better than 10, 8% is better than 9, even if we're heading towards 2. And we've had lower oil prices, and we've had some softening in the dollar. On most measures, it's still quite overvalued, and that absolutely takes the pressure off all emerging economies having a slightly softer dollar. So we've got it weakening a little bit. Not massively, still remaining quite strong, but at least no longer appreciating. But a lot of that does hinge on the fact that the Fed is hoped to peak maybe by the end of the first quarter. We've only got another 50 basis points. Depending on these labor shortages, it's really all about the labor market. If the Fed has to keep tightening beyond that, then the dollar probably would strengthen a little bit. But we actually see inflation staying a bit stickier in Europe for longer than the US. Don't know for rate cuts. The market may be expecting too much there, but I think the Fed peaking should be enough to take some of the pressure off the US dollar.
Well, you mentioned earlier, and I'd like to explore it further, the geopolitical risk and how you're building that into your modeling for 2023. Where does that rate, and where do you see the pressure points? And what should businesses here be looking out for in terms of assessing political risk in the region?
Geopolitical risk very much features in our assessment of really sovereign creditworthiness, in that it affects growth, in that it affects really uncertainty and the conditions that businesses face, their capacity to plan ahead. It affects trade relations, it affects potentially innovation and technology transfers. So we are monitoring really the hotspots, and the report mentioned South China Seas, but also, of course, Taiwan, and relationship between Australia and China and all the various islands. We frame that in terms of fault lines. So there's these geopolitical fault lines and alliances, security alliances that are being redefined in the region. That then has an impact on technology fault lines. We see semiconductor, high-tech industries being very much at the forefront and used as a tool, if you want, to advance certain geopolitical goals. That for companies might create opportunities in Asia with maybe new markets opening up, It also increases compliance costs and potentially duplication if the world ends up with really parallel systems, technology systems working. Trade fault lines, the various trade alliances again being reshaped, and financial fault lines. I think financial companies really reading these developments and assessing where capital allocation should go. So all of this is in flux, and Asia is at the forefront. We don't see that as an imminent risk for 2023. We do not factor in really an escalation of these geopolitical tensions, but it is something that will be there in the background for a region that has thrived on security and globalization. And so here there is potentially a shift. There's really uncertainty about what this new security landscape looks like and what the new trade relations will be.
Tom, regional cooperation is one of the features of the report. We highlight that as something that's required an acceleration of it. As someone who's advocated ASEAN integration very strongly and who's been a regional player at a very senior level, do you see an acceleration in regional cooperation? And how will that manifest itself?
Michael, I would probably answer that question at two levels. One is kind of G2G collaboration or integration, and the other one is non-government or private sector collaboration, P2P movement and the like. We have elections coming up in Thailand and Singapore, Thailand this year, and in Indonesia and Singapore next year. So there might be a bit of a slowdown in terms of G2G collaboration and initiatives. But I'm extremely bullish on B2B, right, private sector, particularly when it comes to digital. And in some respects, inflation can be a positive, right? Like if energy prices are skyrocketing, it puts more pressure on us to become more energy efficient. And so I think collaborating on energy, particularly when it comes to renewable, right? I think the soaring prices for fossil fuels are putting pressure not only on Europe to accelerate the energy transition to renewable, but will also do so in Southeast Asia. Now, it's another positive impact from China reopening potentially. China currently produces 90% of the world's solar panels, 80% of the world's lithium-ion batteries, and 70% of the world's windmills, right? Wind turbine components. And so again, this is something that amazingly, I think is still very underexploited between ASEAN and China, for example. So, but again, I foresee in a very election-intensive couple of years, this being driven more by private sector, B2B, rather than by G2G.
Okay, I want to take some questions now, and we'll bring in the virtual audience as well. And in fact, we'll start on Zoom with Dr. Jared Lyons from NetWealth. Jerry, very good to see you. Your question, please.
Well, thank you. Well, congratulations, Michael, on the great report and presentation this morning. It's also good to hear the Minister communicating a very positive UK attitude towards Asia. I should say I'm also on the board of Bank of China here in the UK, but my question isn't about China. You've mentioned lots of Ds, the dollar, digitalization. If I may, can I ask two particular questions on two other Ds? The first to Tom is about deglobalization. Given that you were just talking about G2G and B2B within Asia, you also earlier talked about how ASEAN was very much basically tied into China. Here in the UK, we hear more and more about fragmentation. In fact, fragmentation was one of the buzzwords in Davos last week. What's your view on the ground about deglobalization and fragmentation? Should we be taking a different future view about how not just Indonesia, but ASEAN will be positioning itself? Or are you still very much of the view that globalization is going to be the driver in the future? So your thoughts from the ground on that. And the second question, if I may, Michael, to the other panelists, after excellent comments earlier, is about demographics. How do they see demographics shaping the outlook? In the last few weeks, there's been greater recognition about China's aging population, don't think people in the West fully appreciate, for instance, that 1 in 4 people in the world live in South Asia. And also Japan's at the forefront with Japan 5.0 about how we handle or should handle aging and social attitudes towards older people. So 2 questions: deglobalization, the view on the ground from Indonesia, so to speak. Are we seeing, or should we expect to see, more future fragmentation? And second, demographics. How should that shape our thinking? But thank you.
Thank you. Tom, let's start with you.
Thank you, Gerard. Whilst, in my view, fragmentation is definitely real, right? Is sort of an inescapable reality of the geopolitical tensions that we have. I really sincerely and passionately believe that deglobalization is not the right term for what's happening. And I really believe, I'm sort of with the school of thought, I guess, that says that globalization is changing, the shape of globalization is changing, and yes, you will see reshoring and friendshoring and all the things that are associated with fragmentation. But actually, you know, in other respects, I see an intensification of globalization. So maybe cargo volumes peaked right around the global financial crisis, you know, sort of 2008, 2009, 2010. That may have been the high water mark for goods. But if you look at cross-border data flows, I believe they continue to skyrocket. And I think digital economies, digital ecosystems are very naturally inclined towards globalization, right? So I think as various economies digitalize and go more towards services sector, I actually think that combination will actually intensify globalization. And I do feel I see it on the ground here, certainly in Indonesia, where you know, everybody is crazy about K-pop, right? Everybody is crazy about Premier League, and social media and digitalization has done so much to bring those things, you know, around the world, and now with new digital technologies, streaming, potentially like Web3 or tokenization, it's a whole new world waiting to be developed, yeah, like a whole new set of business opportunities. So you know, my twist on it is that I certainly struggle to disagree with fragmentation, but actually strongly disagree with, you know, with the implication that entails deglobalization.
Okay, Janet, demographics.
Well, and Marie, I think, wanted to say something on demographics. Yeah, actually, they're both great questions, Gerard. They're both massive topics. But on demographics, yes, they matter. You know, when we think about what drives growth, it's the number of working people and how efficient and productive those people are. And globally, productivity has been slowing down. It's not just a UK story. Even in Asia, productivity growth has been slowing down for some time. So we do need to enhance the productivity, but also in Asia, I think there is scope for still more urbanization. You know, China's the one that grabs the headlines because urbanization rates in China are in the mid-60s. In Brazil, they're in the mid-80s. So when you take people from a subsistence existence in agriculture and you move them to the cities, whether it's cutting hair, sweeping the streets, working in a restaurant, working in an office, working in a factory, they should be a little bit more productive. So yeah, the easy gains from growth are not going to be as easy from the population side. India's at a clear advantage over China, as indeed is somewhere like the Philippines or even Indonesia. But I think the productivity side is very important. Can I also make one point on the globalization? Because I think it is important. I completely agree with what Tom just said. There is more scope on the service sector side. You know, for the last 25 years, we had a lot of automation on the goods side, and we had persistent globalization. Since then, not Asia, Asia's had regional trade deals, but we haven't had a global trade deal for 30 years. We've been adding friction on the goods side. I think if we see digitization and, it keeps evolving into quantum computing and such like, but I think as the minister said, that also brings with it cybersecurity risks, etc. These are long-term challenges. I think there is scope for huge productivity improvements to come through on that. But over the next year or two, I am more in the site that there is elements of deglobalization globally. Asia's offsetting it to a more of a degree, but it will have inflation, growth, trade-off implications.
Okay, Marie, final word to you.
I'll take the demographic question, and I think that we do need to get to a bit of a country differentiation, because obviously very different demographic outlook for across the region. Asia's challenge for the aging populations, which is, yes, China, Thailand as well, aging rapidly, as well as Japan and Korea, well known. China, Thailand are aging at income levels of much lower than what we've seen in Europe or Japan. So that question about where the provision for the elderly will come from, that with relatively small government footprints really raises that question about social contracts. Very different questions for countries like India, but demographics matter too. Yes, very young population, fast-growing young population, but at growth rates of 5–6%, the economy is not growing fast enough to absorb these young people into the labor force. So there the question is really how to create labor markets, a business environment that creates jobs for people in line with their expectations. So demographics is really everywhere in the Asian regional map as a very important driver.
Thank you very much. I'm afraid we're out of time. We have no more time for questions. Please join me in thanking Janet Henry, Marie Duron, and Thomas Lembong, who joins us from Jakarta. Thank you all very much. Thank you. We're now going to delve more deeply into one of the economies we've highlighted in our report, and that is the Philippines. The annual outlook shows that the Philippines economy is likely to grow at a faster pace than many of its neighbors. In fact, it'll be one of the fastest growing economies in 2023, underpinned by stronger domestic demand. Digitalization, in particular e-commerce, is slated to play an important role in the Philippines' economic development. Regional cooperation is also important in the Philippines. President Marcos Jr. has said he wants to elevate regional cooperation with ASEAN on issues including maritime security, climate change, food security, and economic recovery. And this, of course, at a time of heightened tensions overall. Well, now we're going to look more closely at the Philippines. And with us today is Benjamin E. Diokno, who's the Philippines Finance Secretary. He's in the UK with a delegation, including the Central Bank Governor, who's also with us today, Philip Medela, and also the Philippines Secretary of Budget and Management, Amena Pangandaman. Thank you very much for being with us. And it's great of you to take time out of your very busy schedule to come and speak to us at Asia House and give us a briefing on the Philippines, after which the Secretary and I will have a conversation and invite your questions as well. So please welcome to the stage, Benjamin E. Diokno.
Good morning. I would like to thank Asia House for organizing this important dialogue in London. With our strong macroeconomic fundamentals, more open economy, and an innovation-focused business environment, the Philippines is a prime destination for investments. Our upbeat outlook is supported by the bright spots that have emerged over the past year amid global headwinds. The Philippine economy has shown relentless growth. For the first 3 quarters of 2022, our average growth of 7.7% already surpassed our full-year forecast of 6.5 to 7.5%. This growth outperformed major Asian economies, particularly Indonesia, Singapore, and China. This expansion was driven by growth in all major production sectors, services, agriculture, and industry, despite persistently high global prices of fuel, food, and other commodities. Strong household consumption and investments continue to drive robust domestic aggregate demand. Tomorrow, we will be announcing the full year GDP growth for 2022, and we expect it to be a strong one. The crowning glory of the Philippine economy is its young, tech-savvy, and globally competitive workforce, the bedrock of our economy. Many locators in the Philippines can attest to their drive and talent. Therefore, it is encouraging that the jobs market has rebounded and even outpaced the pre-pandemic levels. Unemployment rate improved to 17-year low of 4.2%, even lower than the pre-pandemic level of 4.5%. We also saw the highest labor force participation rate since 2005 at 67.5%, much higher than the 61.7% recorded before the pandemic in January 2020. We have a healthy level of gross international reserves. As of end December 2022, our GIR stood at $96 billion. This means that we have enough to pay for 7.3 months worth of imports, well above the IMF reserve adequacy metric and higher than selected Asian and emerging economies. This is bolstered by remittances from overseas Filipino workers. Cash remittances from January to November 2022 amounted to $29.4 billion. In fact, cash remittances from the Filipino community here in UK, which is our 5th largest source of remittances, have already reached $1.4 billion for this period. Foreign direct investments have continued to soar. The Philippines achieved record high net FDI inflows amounting to $12.4 billion. From January to October 2022, net FDI inflows have already reached $7.6 billion. With bustling economic activity and robust domestic demand, we have consistently overshoot our revenue targets. Revenue collections for the first 11 months of 2022 already reached 3.3 trillion pesos, 18.1% higher than last year's level and equivalent to 99.2% of our full-year target. These numbers indicate the resilience of the Philippine economy and its capacity to expand even further. While analysts expect a global economic slowdown this year, we expect a slightly slower growth between 6 to 7% in 2023, but this is still among the highest growth predictions in the Asia-Pacific region. We then expect growth to pick up in the years after between 6.5 to 8% from 2024 to 2028. Despite external risk and gloomy outlook on the global economy, the Marcos administration's economic team is thinking big and aiming high while maintaining steady hand on fiscal policy. We have a medium-term fiscal framework to guide us towards fiscal sustainability and long-term growth. This builds on the series of tax reforms enacted by the previous administration. Increased fiscal space will allow us to maintain high infrastructure spending of 5 to 6% of GDP annually. This is a non-negotiable condition of our economic strategy. To support investment-led growth, the government established an enabling policy environment that incentivizes high-value investments, enhances ease of doing business, and widens the space for private sector participation in large-scale projects. We have amended our tax laws. The Corporate Recovery and Tax Incentives for Enterprises, or CREATE law, significantly cut corporate income tax rates and reform our fiscal incentive system to stimulate high-growth industries, including activities consistent with the Fourth Industrial Revolution and our sustainability goals. While the recent economic liberalization laws welcome international investors to bring their capital to the Philippines, the Retail Trade Liberalization Act was amended to simplify foreign retailers' requirement by lowering the minimum paid up capital from 2.5 million US dollars to $500,000 US dollars. Meanwhile, we amended the Foreign Investments Act. It provided flexibility and transparency in reviewing the foreign investment negative list. The law liberalizes the practice of professions, making it easier for foreign investors that require foreign talent to do business in the country. Lastly, we have amended the almost 100-year-old Public Service Act to allow investors to fully participate in previously protected sectors, such as toll roads, telecommunications, airports, expressways, and shipping. In addition, we have opened up the renewable energy sector to full foreign ownership. This presents a huge opportunity for the vibrant RE industry here in the UK. Furthermore, the Department of Finance established a sustainable finance ecosystem to synergize investments from the public and private sector. This is set to yield green and social projects that will have lasting impact on the environment and on our communities. The Sustainable Finance Roadmap and Guiding Principles that are key documents that the Department of Finance, through the Interagency Task Force on Sustainable Finance, or what we call Green Force, developed to pursue this endeavor. This serves as a taxonomy of sorts for the sustainable finance ecosystem in the Philippines. This is aligned with the ASEAN standards for green bonds, European Union taxonomy, and so on. The Sustainable Finance Roadmap can facilitate catalytic investments to support the country's nationally determined contribution implementation in raising ambitions. The Republic of the Philippines has also successfully tapped the international capital markets with its offerings of sustainability bonds. The recent issuance in March 2022, October 2022, and just this January 2023 secured strong demand from investors. This highlights the growing investor-investor confidence in our commitment to achieving sustainable development and mitigating climate change. This is just a taste of what the Philippines has to offer. I look forward to exchanging views with the British business community this morning and exploring the many opportunities that the Philippines has in store. Before I end my presentation, let me make an announcement. For those of you who would like to know more about the Philippines, I advise you to attend the Philippine Economic Briefing tomorrow, 9 a.m. at UBS. Okay. You may approach any member of our team to pre-register, and there's a table outside. Thank you very much.
Finance Secretary, thank you very much for a very comprehensive presentation. I want to delve a little more deeply into some of the things you raised there, but first, the inflation and interest rate outlook. Our report highlights the need to get that policy mix right. And my take on it is that the Philippines has been pretty aggressive in raising interest rates. Inflation at a 14-year high last year. So two questions. What's the outlook for rates? Are we expecting further increases? And I think your central bank governor has hinted as much in a Reuters piece I read earlier. And has inflation peaked in the Philippines?
As you know, we have an independent central bank in the Philippines. And may I ask our central bank governor?
Throwing it straight to the central bank. We'll bring you over a microphone.
I used to be governor before. You can ask.
Here's a microphone for you, sir.
It's natural. The Secretary of Finance gets outvoted.
Of course.
Because he wants lower rates. But he became very aggressive because strong dollar was becoming a problem. And it was very clear that the market wanted a reasonable differential between our policy rates in the US. For instance, if the the policy rate in the US, it's just 50 basis points
Yeah.
higher in the Philippines. Signal to the market is we want a weak peso, which could help, but all things considered, peso has depreciated enough. And that explains our aggressiveness. As to your question about whether inflation has peaked, I think if the measure is year-on-year inflation, December was already the peak. In fact, we expected the peak to be October, September, but food, vegetable prices was very high. Sugar in particular became very expensive.
Mm-hmm.
And I think, as pointed out by Secretary of Finance, some of it actually requires freer trade because some parts of agriculture are overprotected and account for a large part of the inflation. The problem, of course, is that agriculture is also the poorest part. So I think the solution is to have more direct safety nets so that as we expose agriculture to more foreign competition, we reduce inflation, but at the same time, we do address the fact that the rural sector is also the poorest part of the economy.
Yes.
So whether we will raise rates, how much we will raise it, clearly depends on how far, what the US does. But if the current forecast of what the US will do, we probably 50, 75 basis points more in the next 2 quarters. So one way to look at it is the policy rate in the Philippines is quite high. The other way to look at it is relative to inflation, it's still reasonable. For instance, our forecast for inflation this year is it will average about 4.6, 4.7%. So if your policy rate is 6%, in real terms, it's really not that high.
Yeah.
Of course, the problem is because of the pandemic, we had a very unconventional policy. We actually bought a lot of bonds, which we're not doing anymore. And we made advances to the government, which we are not doing anymore. And we cut the policy rate to an all-time low of 2%. So we're also exiting that from abnormal.
Of course, yes.
So we're also exiting from a very abnormal monetary policy, and at the same time facing very high inflation. So I think we're more or less on top of things. And if it turns out that the inflation is much worse than we expect, of course, we might have to act even more aggressive.
Thank you. That's very frank. So we're looking at 50 to 75 basis points potentially, more if inflation starts spiraling higher, very much dependent on the US. So I'm going to make sure you answer the next question, though, growth. You're forecasting 6 to 7% growth. That's a slight downturn a slight slowdown from this year, although your official figures come out tomorrow. We're assuming a slight downturn, but still very strong growth. What sectors are you seeing that growth in? What's driving it?
I think services will continue to be strong. And then we opened up new areas, like, for example, mining. We've closed mining for the last 10 years. We opened up. At its peak, the contribution of mining was 7%. So because we closed it, it's almost practically nil. So that's one other area. Plus, we are very strong on digitalization.
Yes.
So we hope to improve the efficiency of the government. During my term as central bank governor, my goal was to digitalize at least half of all retail transactions by mid-2023. I think we're almost there because of the pandemic. And so we will continue to do that, both in the public sector and the private sector.
Because that's key, and again, the highlight reports that the acceleration of the digitalization of Asia, key to underpinning growth. So you're pretty much on track for achieving the goals you set back when you're central bank governor. How important a role does it play, though, in your overall growth forecast, not just for this year, but going forward?
Going forward, we also, when we assumed office, when I say we, this new administration is only 6 months old.
Yes.
We inherited a very much reformed tax system. Okay, and in fact, we cut personal income tax, we cut corporate income tax, we rationalized fiscal incentives, and right now we are also going to pass new taxes addressing the need for climate change. For example, where there will be a tax on single-use plastic in the Philippines. And we also have, as I mentioned earlier, we also have a new tax regime for mining. So all this will
So that new tax regime is going to help
make
this
the
government.
economy more dynamic, yes.
Yeah, you mentioned the green ecosystem that you're creating. Give us more detail of that and how that's going to, how did you term it, the sustainable finance ecosystem.
Yeah.
What are you hoping to achieve with that? Do you have targets in terms of green investment that you are seeking? Do you have projects that you're trying to get investment for from the private sector? Give us a little more detail.
To be frank, this was one of the programs where the UK government assisted us. Okay,
Yeah.
in this green, we created a green force. This is a committee of all major departments. So we feel that this area has to be an all of government approach. Okay?
Right.
So we had developed a framework, we have developed a taxonomy, and in fact, we complemented that with the issuance of green bonds, and so it's now picking up. Right?
You say in your presentation that foreign investment is soaring, I think was the term you used. Again, where's it coming from? And what sectors is that investment going to?
It's coming mostly from Asia,
Yeah.
US, UK also,
Yeah.
right? And so this administration has gone around and trying to energize the foreign direct investments, and there's a lot of interest from. We just been from China, and they are interested in agriculture imports. Plus, we produce a lot of mining products that will be used for electric vehicle, and so that's the other concern. There's a plan to establish a plant in the Philippines because we export ore products. So
Yeah.
we have processing. I think digitalization is really one of the concern of many investors. They want to increase. We have a very dynamic business process outsourcing in the Philippines, and so they bring in something like $30 billion every year, and I think that will expand significantly as a result of the pandemic and the picking up of economies.
And you're happy to take questions from the audience. If anyone wants to ask the Finance Secretary a question, just put your hand in the air and we'll bring around a microphone in a moment. I want to touch on a couple of things. China's reopening post-COVID, and Tom Lembong put well that growth, or the increased growth we might see of China, will be amplified across ASEAN. Is that likely to make your outlook for growth even more positive?
Absolutely.
Yeah.
In fact, many analysts are now coming up with a new set of countries in the ASEAN region: VIP, Vietnam, Indonesia, and the Philippines. And the three countries account for more than half of the ASEAN, 680 million people. Okay, so that's a very dynamic force. Okay.
I'm told we're almost out of time, so forgive me, we might not have time to go to questions. One more for you, though. Your president has highlighted regional cooperation, and an emphasis of the government is to cooperate regionally. In terms of growth, how is that going to manifest itself? What partnerships are you looking for? What trade deals are you looking for to try to generate growth in the Philippines based on greater regional cooperation?
The ASEAN region is a very long history, and they talk among themselves and they say, look, we'll probably be the major source of growth for the entire world if we get together. And so they talk to each other. They talk in Cambodia recently, and then Bangkok recently, Indonesia. And so I think the group will be more cohesive, and they will be under the new regime. I think they will. Although some countries are facing elections, right?
Absolutely. Yes, there's a lot of elections.
One in Vietnam, to another one in Indonesia and Singapore. So our president, I think, is the first majority elected president in the longest time. And as you can see, there was a smooth transition of power. So that's a plus for the Philippines.
unlike other countries, right?
Tremendous. Look, I'm afraid we're out of time, but as you said, you're holding a session tomorrow at UBS, and I'm sure your staff, if anyone's interested in joining it, I'm sure it'll be fascinating. Please tap them. But for now, please join me, ladies and gentlemen, in thanking the Finance Secretary. Look, I'm afraid we are out of time. Apologies for running a little late, but it's a fascinating conversation all around. I'd like to thank all of our speakers today, Mr. Anne-Marie Trevelyan and our panelists and Finance Secretary Yokno, and of course, Central Bank Governor, who was pulled in without warning by his Finance Secretary. I'd like to thank all of those who have joined us on Zoom. Very good to have you, and all of those who have joined us in the room. Great to see you all. Thank you very much. Hope you enjoyed the report. Please, any feedback, most gratefully received. Take care. Have a very good day. Bye for now.